We're going to do a brief video on meta stock analysis, and we've got a daily chart up here for you with a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. Let's go back here real quick to early January of 2022, and we can see this stock entered a bear market and had a huge gap in here from about it looks like roughly 316 all the way down to about 247, and met a gap down there, went into a very severe bear market, and has been kind of working sideways and drifting down ever since. You can see that when Meta gets a decent distance from the 200-day moving average, and you can measure this if you build a trading system, but just for rough purposes, when it gets this gap here between the blue 200-day moving average and price gets to be too far, it rallies up. Now, what's too far? And the answer is it's completely objective unless you build a model, but you can build models. And this gap, when it gets extreme, the stock rallies. You can see it did it here, did it here, it did it here, and it reduces this gap between price and 200-day moving average. So why do I bring it up? And the answer is because Meta's been selling off all this week. Price is down here. The low is 148, and our gap is too big again. So we're due for a rally in Meta. Meta again is in a deep bear market. I'm going to show you some support in a minute and give you an argument to why this stock's going lower. But in the near term, this stock's going to do several things, in my opinion. This is all from my opinion for entertainment purposes only. But Meta's due for a rally back up to the 169, 170-ish, maybe 175-ish zone, and it's due for that probably, I would say, by about the first week of October. We're due for a little rally in here. The longer it takes, the shorter the rally is going to be. But probably we're going to get to the 170 level, I would guess, by the first week of October. Now let's take a look at other technical aspects of this stock. You can see that we put in a bottom here back in March of 2020 at 144, and we're currently low of this week was 148. I'm sorry, 144.29. So we're already attacking these lows here. Let me make an adjustment. The low was 137 in the spring of 2020, and this week our low was, looks like 144. So we're going to make, my best guess is we're going to make a challenge of this 137 low, and then the next support is back here in looks like December of 2018 at around the 123 level. We may do that one as well, but we're definitely going to challenge this 137 level. However, the question is, what's going to happen overall? We may go down to 137 first and then rally back up to about 170, or we may go back to 170 from where we are. But my best guess is, and again, it's all my opinion for entertainment purposes only, we're going to get a rally in Meta, probably back to the 170 level. We may go to 137-ish or a little lower, but then we'll get a rally back up. Again, that's my best guess based on previous price action in this stock. It's never a good idea to try to catch a falling knife. Meta's a falling knife right now. You pick your bottoms or sell your tops or do whatever you do at your own risk. But that's the way I see it right now. Maybe a slight more decline and then a rally back up to the 170 level, and then probably a continued decline. This stock's a bear market stock. I don't see any reason to change that overall fundamental analysis, but even in a bear market, you're going to have to trade the stock if you want to get in and out of it, and that's what's going on here. Should you get short at this stock at this level? That's a personal decision, but you certainly wouldn't be technically out of the realm of sanity if you did that. It's just a question of where do you get short, where do you get long, and in general, this stock's oversold. So I think that from short-term trading purposes, maybe a little bit more of a sell-off and then a rally up to the 170 level, and probably then a continuation to decline. I think we're going to definitely test the 137 level, and we're probably going to go down here and test eventually, it's too early to tell right now, but eventually test the low 120s and see what happens with this stock, because we are definitely in a deep bear market, and I don't necessarily see anything pulling us out of that right at this moment. But again, you're going to get some rallies. So that's the technical analysis part of it. Let's go down and see here if we cover Facebook. I think we do. This is RBM Research Algorithmic Trading, and we can put in face and see what we get. So we cover Facebook. This was Friday's price, and as you can see, we haven't updated for Monday morning yet. I'm making this on Saturday morning, and you can see that on Friday they had 0 entry prices for Facebook, which was good because Facebook sold off big time on Friday. So it's consistent with that analysis is consistent with what the market did. We put these out Monday through Friday before 7 a.m. For 190 stocks, including Facebook. You can get all of our algorithmic entry points at rbmresearch.com, and I'll show you how to get them for absolutely free here in a moment. Let me X out of this real quick and show you how they work. We have 1, 5, and 20-day holding periods for these stocks, and again, we cover 190 plus stocks, longs only for the stocks. And basically, if you bought today, assuming your own analysis says it was a good idea, you close out worst case at the end of the first trading day on this column at a loss, or take your profit as soon as you get it. Same thing for the 5 and the 20. If you bought the 20-day hold column, you'd buy today and close out worst case at a loss at the end of the 20th trading day, or take your profit as soon as you got it. So that's how these work. And again, we cover 190 stocks, absolutely no cost, no credit card required, at rbmresearch.com. In addition to the 190 stocks, we cover the major forex pairs, we cover BTC for crypto, and we cover the most liquid futures contracts. There's a link in the description below. You can just click that link, go to rbmresearch.com, and sign up for free. If you like this video, please click the like button. If you want to subscribe, please do that. Please leave us a comment in the comments section about our moving averages. Do you like them? You don't like them? And what would you like to see change about them so we can improve these videos for you? And we're interested in your opinion on the effectiveness, the reliability of moving averages. We've tested them and we like them, but we like quantitative trading a lot better. And that's why we offer quantitative prices for you before 7 a.m. every morning, Monday through Friday. Keep in mind, everything you see on here is entertainment purposes only. You can't rely on our commentary or entry prices for anything other than entertainment. You have to use them only for that, and you have to do your own analysis, of course, and you definitely trade at your own risk.